You too, Tyler?
Oh yeah.
Every now and then I'll do the 1.2.
We're at that debate this one on
One
some
X
screen
too.
I'll even do
It
YouTube
depends,
at like
depends on the
2x.
talker. Like if I listen to like a Colin Coward, the dude already talks fast.
Oh, okay.
So like if he's already talking fast and then you throw it on 1.2, you can't even understand what he's saying.
Yeah. When I listen to Bill Simmons on regular on one, I'm like, dude, you've got to go faster.
I suppose
This is
once you get used to 1.2,
once you get used to it, yeah.
and then all of a sudden you go back to
Oh,
one,
it feels
they sound so slow.
Yeah, exactly.
All right. Here we go. All right, we are back. Episode 10.
Double digits.
Already there. That
Jeez.
was fast. Well, we are joined by a new guest today.
It's not me.
Not well, we know it's not Keith. One of our, and he's newest to our team as well.
Yep.
Newest to the podcast, newest to the team. David
By a long
Aamot.
shot.
He's here.
Yeah. Thank you guys.
Yeah. Glad to have
Jeez.
you on.
It's an honor.
What number?
Wow.
What, wide receiver,
Yep.
Bethel University. What
Yep.
what number did you
I was 3. I was number
Oh, look
3.
at that. Me
I
too.
was
As a receiver?
so lucky to get 3. It was ridiculous, but yeah. Phenomenal number.
Why 3?
The day that they sent out the email to actually like have people pick their number was the day that Dwayne Wade retired.
Okay.
So then I was like number 3, easy.
Nice.
And then didn't think I'd get it, but
3, like even through high school and
no,
youth?
I was 24 in high school as a receiver, then 23 on the basketball court. But
never
yeah.
had the 80s, huh? You were never
never in the 80s. The 80s is sweet, but you gotta pull it. It's gotta be like an 85, and then you gotta pull it off. But I like the single digit. The single digit was the way to go. I liked it.
Just so
Well-
you know, I've been number 3 since the 90s. So my friends still call
really?
me. Yeah, they still call me by 3. That's what they call me. Like
What?
when they
I
hear
like it.
Jeremy, it's a weird thing for them. It's funny.
3.
It's a good number.
Yeah.
I didn't
It's a
know
really
that.
good
either.
solid
ball.
Tyler, do you know that little
Mhm.
factoid?
I was number 40 in high school for hockey.
40.
Yeah.
Wow. How'd that happen?
I was number 12 all the way through youth, and then 12 was taken. So I just
40.
yeah.
40. Mine was 22. Ironically, my wife's number playing college softball was 22 as well. So
Okay.
weird.
Match made in heaven.
Yeah, there it is.
Double deuce.
And then Keith is with us again. Jeremy, do we consider him a host now?
He's like a special guest star. You guys are too young for this, but like in the 70s, there would be like these special guest stars that were just always on.
Never
And
leave.
that's Gangl now.
Yep.
Yeah. He's our special guest
Yeah.
star that just never leaves.
Never leave.
The couch is so comfortable.
All right. So my
Uh-huh.
hot button topic for this week, and the reason it is Wall Street price targets. And the reason I think it's a hot button topic is we've now had a few of the Wall Street strategists raise their price targets this week. Goldman, Citi are the kind of the most notable. But my question to you guys is that why do we care? Keith?
I'm not sure we actually care, but it's just, it's more of them putting a number out there. It's I'll put it this way. It's a very difficult thing to do. We all make fun of them, but because they're always wrong. It's just hard to put one number on where you think the economy is going to be in a year. So, but I think directionally, it's interesting to see where the pack is. Like when you beginning of the year, it's like generally speaking, most people will say that 8 to 10%. That's not going out on a limb, right? So it's that. But what I find interesting is that the outliers, the one that's really high on the street, or the one that's very low. And I'm more interested in the commentary around why they're high or why they're low. How about you, Jeremy?
Yeah, that's the bigger thing for me is how do they get there? Like, what are they saying that, if you're coming out with a price target, if you're just kind of matching what the street valuation already is, then there's not a lot there. But if you're telling me how you got there and why you got there and where you are in the cycle, it's usually, to be honest with you, the real value of those strategist targets are not the headline. It's the commentary within their pieces. And it's like talking about the business cycle, talking about where they are. That's a little bit more interesting to me than what the actual number is. I don't use it at all.
Well, it's interesting too. You just said it. Most of the time they're at like the 8 to 10% range, and it could vary. Maybe their earnings per share on the S&P is a little bit higher, valuation's a little bit lower, or vice versa. But they all seem to get to the same point. But I brought some notes today with me. So
It's for the new guy, David.
Yeah,
you better
there we
watch
go.
out.
because
Yeah,
I
I
found this fascinating. So most of the targets are always around that 8 to 10% range. And we always tell folks that, on average, the market is around 8% over a longer period of time, right? How many years since 1926, or percentage of years, which is 99 years, basically, including this year, how many years do you think the market has actually had a return between 7 and 9%?
I'm going with Jeremy's lucky number of 3. It's really low, I'm sure, because
That was a
that's
lot closer
tight.
than I thought you were.
I was gonna say between 5 and 10.
1 year.
Yeah.
Jeez.
Lucky 3.
Which is amazing to me. And even from 0 to 10%, there's only been 14 years since 1926.
That surprises me.
It doesn't, to me, to a certain, because I've said it a lot, and when we do events and things like that, I've always said it's like, yeah, 8 to 10% a year, but if you're expecting 8 to 10% every year, you're going to be sorely disappointed because you get it by -10, +25, -12. So it doesn't shock me, just because I've seen that and I've kind of used it as, hey, you have to stay invested to get this 8 and 10%, and it's going to feel terrible at some points and it's going to feel great in others. But overall, that's how you get it, is taking the risk of -10s and -12s and then those +25s and +30s. That's how you get the 8 to 10 is staying the course on there. So it doesn't, one, surprise me, but the fact that it's not anywhere near the majority doesn't surprise me that much, just because of what happens in markets.
I just found it fascinating because, again, a lot of people put a lot of weight on the strategist price target, year-end price targets, but they're never right, and they always are around that 7 to 10% range. But statistically speaking, you're not going to get a 7 to 10% year.
Yeah. On a year-to-year basis, it's a coin flip.
Yeah.
It really just is. And the stats would prove that out. Is like, what is it, like 51 or 52% on a year, over the next year or next couple of days, what it's going to look like and all that stuff. And then as you get further along, your predictability becomes better.
Yeah.
As the more years comes by, but on a year-to-year basis, it's a fool's errand, to be completely honest with you, to throw an exact number out there and say you have any confidence in it at all.
David, you're the new guy. What's your prediction for the year?
5,600.
Nice.
5,600.
No, you go right with the
yeah,
consensus.
yeah.
You just live with the consensus.
I do think it's interesting to see how close we're getting to like the bull case for the year. Like halfway through the year, what was their bull case in December? How close are we to that? How good has the year been? I think that's interesting. But yeah, Jeremy talking about the story and the commentary being more helpful and more interesting than anything else, I totally agree. I think that's where it's at.
Yeah, the bulk, it's funny because we see this on individual stocks all the time, right? Is that the price targets get raised up because the stock has run so much.
Yep.
Is that, I often, sell side job is hard, but I do often make fun of them when they don't change their earnings estimates 1 iota or anything like that. But the stock is, now the stock target is up 20% because the stock has rallied. It's like, it's a pure valuation game. And it's like, oh, I got to catch up with them. That's really what that is. There's nothing fundamental that tells us that. And I think strategists fall into that same trap. It's like, I can't look that terribly different because it's going to look bad if I'm wrong either way. So you kind of start to see them meld towards the middle. It's fine. It is what it is.
Yeah, you don't see many, like last year the markets were up 25%. You don't see many strategists saying, I'm going to say 25%. Or, the couple of years that were down when it was 20, you don't see, even if you're a bear, you're not saying, oh, the market's going to be down 20%, right? To Jeremy's point of it's very dispersed.
Well, and a lot of these analysts will update their models around this time too. So I'm sure we'll get another flurry of strategists, probably, I would guess, raising their price targets on the S&P. But again, I think to your point, it's not necessarily the actual target, it's how they get there and the commentary that surrounds it, because that's the more interesting thing of, okay, where are we in that economic cycle? What stocks are working? Which sectors do we think are going to be the best? And that allows us to get to the price target that we're at.
Yeah.
I think that's the more interesting thing.
I think often the price target is the thing that gets you to read it, right?
Yeah.
That's what they're trying to do, is headline and give a number, and then here's the analysis around it. For us, the analysis is the more important
Well, and
part.
generally speaking too, like we know who the analysts or the strategists are at this point, and which ones are going to be on the high end and which ones are going to be on the low end, right? Like it's really not a shocker for the most part. Sometimes you might get caught off guard, but like Tom Lee at Fundstrat, that he's always bullish, right? Just
Mike Wilson
at
generally
Morgan
been
Stanley is going to be
more negative.
Yeah.
So they certainly like to poke fun when either one's wrong, right?
Yeah.
I mean, that's kind of what, it's like one's awesome. That's kind of interesting when the person that's been really bearish turns a little more positive and why they are, or vice versa. The person that's been really more bullish and flips. That's kind of interesting.
I was just going to say that's actually quite interesting to me, is when you start to see them pivoting or at least hedging.
Yeah.
To a certain on either way, right? I'm hedging my bearishness, I'm hedging my bullishness. When you start to see those pivots, or I'm digging into it further, it's worth at least looking at in that, because they do good work. Don't get me wrong. It's like when I'm saying that it's, the number itself is difficult. It's not like they do bad work. It's just a question of, is the number worth it? Or do we pay attention to the number as anything we're doing from a decision-making perspective? No, but the analysis might actually trigger some decision-making.
Yeah. Well, this kind of brings us into the next section of nerding out of valuations. And the reason I wanted to bring this up was I've started getting questions on it, because the S&P 500 is at about 21 times and we use the price to earnings ratio for general valuation, right? To tell if something's expensive or not. And so the market, the S&P 500 is around 21 and a half times right now. And I think people start to get concerned when valuations are that high. But I'm curious, Jeremy, your thought on, do you think it's overly expensive, or do you think we're just in a different kind of era of valuations right now?
I always hesitate when people say it's different this time. So I think the market is expensive. I think, but what does that tell you? That's the bigger thing to me, is it's not necessarily a great indicator of what your next 6 to 12 months looks like. In fact, it's a pretty terrible indicator of what your 6 to 12 months, because expensive can always get more expensive. The momentum train can always go further and longer than people anticipate. What I always say is expensive markets is longer periods of time. You should probably hedge a little bit on what you think your long-term expectations should be, right? When you're paying cheap, you should expect probably higher than average returns. When you're paying expensive, you should probably expect lower than average returns. I think that's the way I think about it, much more than any trigger point in saying, well, we've got a 10 or 15% correction coming because the market's expensive. You're going to lose that battle in most instances. And you're already seeing that, right? The market has been, if you say average or 16, 17 times.
Yeah, I think it's like 14 to 19 is generally the range. So
I mean,
16.
so, you're 19 to 21 from that. If you had just said, I need to sell as soon as the market looks like a little expensive, you're going to miss out on a lot of rallies. So you have to be careful about that even though I'm saying it's expensive, does that mean that you need to pull your money out? Absolutely not.
Yeah. And
I mean, you're the growth guy, so I mean, it's not like you pay attention to valuation.
Yeah, come on now, I do, but yeah, it's Jeremy summed it up very well. Expensive can stay expensive. I mean, I looked at, I am a growth guy, but I like to look at PEG ratios, right? So I don't mind paying higher multiples as long as the growth rates are there. So that's kind of my caveat as well. You hear some people making the argument that technology is now a lot bigger part of the index, which generally speaking is a lot higher PE than the overall market. So there's generally a little bit of a bias that maybe that 14 to 19 range is a little higher. Maybe it's 15 to 20, but I don't disagree. At 21 times for the whole market, that's kind of expensive. So then you start digging at individual stocks, which I'm sure we'll talk about here in a little bit about what's driving the overall valuation. It's one of the names I'm sure we'll talk about, which we talk about almost every week, is NVIDIA, right?
Wait, what does that company do again?
NVIDIA. I don't know. Something to do with chipsets and AI, artificial intelligence, and, picks and shovels. They are the, I've owned it for a long time, liked it a lot. I owned it when it was trading at 60 times PE. Then all of a sudden they start blowing away their numbers, right? You think that's expensive, but the growth rate was there. And all of a sudden they start growing at, 50, 70, 100% growth last year. And now the PE at one point in time went down to low 20s, which I'd argue it certainly deserved a lot higher multiple than the overall market, it was trading at 20 times. But now I think it's back in the mid 40s. As of yesterday, ding, 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 where's the bell? It actually is now the largest company.
Yeah.
Which that I can guarantee there's probably a handful of investors across the world that would have made that prediction a couple of years ago that they would surpass Apple and Microsoft.
Well, so there was a note on, I don't want to go too far on NVIDIA here, but there's a note that, it took them, I don't know exactly the year that they IPO'd, but it took them from when they IPO'd to not too long ago to hit $1 billion or $1 trillion valuation or market cap,
Yep.
right? The next billion took them 9 months. To get to 3 was 3 months.
Yeah.
Jeez.
Which is wild.
Yeah.
I mean, it's compounding, obviously. So the
Get the smaller percent change, but still.
I don't care. I don't care
Yeah.
about it that it was compounding. It's
Yeah.
still just amazing. Yeah, I mean, I think, from valuation, the interesting part about that is what's driving that upward. I think, again, we're a concentrated market right now, right? Is that 7 stocks out there really are 30% plus of the market. Those are more expensive. And again, from that side, that's what I worry about a little bit more is because we're a concentrated S&P 500, if those companies just normalize in valuation or just kind of come down a little bit, it's going to be hard. The 12s and 14, they just don't have enough to really offset that. So that's what I worry more about is those concentrated valuations among those 7 companies. That's bringing the average up. Because I think if you look underneath the hood, there's still a lot of relatively rational valuations for companies out there. It's just the bigger ones have had such performance that they've become bigger. NVIDIA's of the world, now the biggest company in the world, which again, bingo card would have never been on there. But from that side, it's saying now that those companies, let's say those companies' valuations just come down just because people just get a little nervous. Well, it's going to be hard for the rest of the market that is reasonably valued right now to offset that.
Well, I think there was a graph. I think it was from Bloomberg or somebody, but I think if you strip out the Meg 7, I think the valuation for the other 493 is like 18 times.
Yeah.
But the market's trading at 21 and a half. But and to note that, I mean, Apple 30 times, Microsoft 33, Nvidia 43, Alphabet 22, Amazon 35, Meta 23. That's 31% of the S&P.
Yep.
So that's where I get into the argument of it might be a little bit different right now. And you can't necessarily say that the market is overvalued because those 5-6 names are the ones that are dragging that multiple up. So again, if you're investing in those other 493, you're probably not that expensive at this point.
Well, too, and Keith was talking about PEG. On this list, Apple's the only one with a PEG ratio higher than the rest of the S&P 500. So adjusted for growth, yeah, they're still expensive, but they're not that expensive relative to the market.
Yeah, they're exploding in growth.
Yes.
It's a good problem to have. The problem is if those estimates are a little wrong.
Exactly.
You got the double whammy, right? Estimate numbers come down and valuation comes down with it. Yeah, that's the hard part. And that's the risk that you're dealing with right now.
Well, and to your point, Jeremy, too, expensive can stay expensive. Like, it just doesn't mean that the market has to fall 15% to correct that as soon as you get over one standard deviation away from the average. But another chart that we saw, and it was a messy chart. You guys looked at it and you guys made fun of me for it. But it went all the way back it went all the way back to 1926 of the median valuation of the S&P, and it was 18 times. So I mean, and there's peaks and troughs throughout that, and the median kind of takes that out rather than just looking at the average. I just thought that was interesting because we always hear, 16 times, 16 and a half times is the longer term average. But then on a median basis since 1926, 18 times, which is a little bit higher than I think I even thought it would have been. So I think that's just an interesting thing to keep in mind too on valuations.
Yeah. I don't think there's a magic number like 16, 17, whatever it is about that's the number it should be. I think that's hard to do. Right. So you have to kind of assess that, again, the further you get away from longer term averages, the probably more likely it is that we correct to some extent. And the other way happens too. As the cheaper it gets away from long-term averages, you're probably going to have some reversion to the mean that probably gives you better upside over a longer period of time. Doesn't mean 16 is perfect. Doesn't mean 18 is perfect. It just means that those further stretches gives you less room to do,
less room for error.
Less room for error. That's a perfect way to
Yeah.
put it. Yeah.
Well, maybe we should do this analysis. I think it'd be interesting if we did, when valuations get above 20 times, what your forward 1 year return or forward 3 year return would be. I think that'd be an interesting.
Good thing we got David here.
Yeah, I know.
Super
Exactly right.
analyst, right?
Yeah.
Super analyst.
Better take-
First year analyst job.
Better take a note on that one.
Yeah, I will.
Pet project. Put down the football.
Yeah, exactly.
Okay, so switching gears here, my wait what for this week. You and I had talked about this a few weeks ago, I think. I just thought it was really interesting, but Comcast now is introducing a bundle that bundles some of their channels with Peacock, Netflix, and Apple TV Plus. And Disney is now going to bundle Disney Plus with Max and Discovery. So did the streaming wars go too far? Like, are we now in the stage where we're back to bundling?
Yeah. Go ahead, Jeremy.
All right.
I'm sure. The reason I'm defaulting to Jeremy because he's got every subscription.
Because I own them all.
I don't know.
My wallet
interesting?
went too far. I'll tell you that from that. Yes, we went too far in the effect of every one of these cannot be their own service. It can't stand on its own. I'm one of those rare people. I love the library of it. That's why I love streaming, is that I can find things that go way back, and I don't have to, the old cable is like, if you didn't catch it or you didn't TiVo it, you missed it, right? I hate that. So that's why, and I also hate that when I can't watch something that I want to watch. So I just own them all. But I think that absolutely went too far. The question to me is this the way it's going to go? I think they're all now realizing they went too far, right? And so they need to figure out ways. How do we do this? If you look at who they're bundling with, like Disney with Max and Discovery. Well, Max and Discovery are, that's Warner Brothers. That's not been the best outlay here lately. They've had some difficulty. Paramount's having some difficulty. Those kinds of things need to figure out, how do we attach ourselves to something that's working so that we can go along too, because I think independently they're in trouble. So Comcast still needs to figure this out too, right? Comcast has Peacock. I guarantee they're going to try to figure out something with sports and oriented around that. They need to figure out how to keep those people in those bundles, rather than, I think most people, not like me, are saying, well, I'll use this one for a little bit, then I'll cancel that one, and then I'll use this one for a little bit, I'll cancel that one. Who has the best shows? Who has the best content? They're making choices just like they did with channels. Now they're just doing it on a monthly subscription basis. So I think consolidation is absolutely going to happen, whether it's them partnering or eventually just there's less of them.
Their library.
Exactly. Just selling the library and folding it underneath one particular large streaming service.
Disney.
Yeah, exactly. They'll be one of them. Netflix will obviously be one of them. I think that's where it always, it probably ends up at some point. I don't know when that'll be. They'll fight it hard.
This goes a little bit to young versus old. I'll get you guys two opinions. Jeremy just owns everything, and I'm pretty close to owning everything as well. Jeremy mentioned the churn fact. You can turn things on and off.
Yep.
Do you two do that? I mean, I'm more in probably Jeremy's camp. We don't. We get stuck with bills longer. And so how frequently do you hop from one service to another service?
David?
I'm in a unique situation because my TV was the house TV going all through college. So then all my buddies signed in, and then they stay signed in on that. So right now I don't have to pay for anything, and I've got everything. So we'll see how long that can ride. But no, that's nice. I care more about the new stuff than anything else. So
David's a TV hobo.
Yeah,
he just like rides the
exactly
trains.
right.
Kind of like my couches.
It's the couches. So I like HBO because you get all the new movies depending on what TV shows new. But I don't really churn anything. The only thing I do next is NFL Sunday Ticket, but that's so darn expensive that I just don't want to touch that.
Yeah,
but
I do for sure. Like live TV, like we always do Hulu Live TV Plus or whatever I don't know what it's called now. But the only time I turn it on is for the football season, because we don't have cable either from Comcast, Xfinity. So I always use Hulu, and then whenever the football season's over, I turn it off because I just don't watch TV. That literally the only reason I have it is so I can watch Sunday football.
Yeah, I think that's one of the things that you talk about bundling. It's live sports. I think that's a key driver. If you don't have live sports, I think you're in trouble. I mean, you and I like the streaming libraries, which is nice. I mean, to go out there and watch whatever show. And
guess who realizes that live sport? I mean, Google, Amazon, they're realizing that there's some pocketbooks right there. So that just gives another difficulty. I mean, Turner's going through that right now, right? Is that the NBA contract is coming up? I know you guys probably aren't following it. I'm a dork. I'm following it aggressively. So the NBA new TV
NBA's done.
I know, right?
Season's over.
The new TV deal is coming out right now. It's supposed to be anytime soon, and NBC wants back in. That's why I was saying that Comcast is probably going to get involved in some way, shape, or form in sports. But it's leaving Turner out, and now Turner's trying to figure out, like, what are they if they don't have inside the NBA and TNT? like, what are those networks? Is it, I mean, what is bringing people to those networks? Reruns of 1990s movies? I mean, it's like,
Yeah.
they don't know what they are without that, and that's the difficulty. But I don't know if they have enough money to compete with the people that want in. So it's a really difficult position. I wish I had an answer for him. Maybe I'd email him.
Here
But
in the Midwest, Bally Sports, aren't they going bankrupt?
they've already done that. Yeah, that was just a terrible. Yeah, that was a terrible deal. And to be completely honest, I think the sports networks or the sports, the MLB especially.
Yeah,
I think they just screwed that up. Because they should have used the first instance of trouble there to probably take it under their network and then say, we'll manage it for a couple of years and then we'll go farm it out.
I haven't been able to watch the Wild in like 3 years.
Twins.
Jeez.
No, don't worry. They hooked me for a year subscription. Now they're belly up. So
and it's been a terrible service. It was just
terrible,
awful
You paid
service.
for a full year.
I'm a huge Wild fan, right? So I paid for the full year. Figured it wasn't much different from monthly, and all of a sudden, basically, the Twins aren't on there now. So I just got robbed, highway robbery.
Yeah, and the company's bankrupt. So good luck.
Yeah, good luck.
That deal is just awful.
Yeah.
Like, hopefully
Bitter.
that's the last one. Like, I'm actually I welcome the overlords of Amazon and Google because they'll throw money at it. And it won't be this rinky-dink service that you get from
So do
Valley.
you think like a Amazon or a Google will be the ones to kind of buy or create this platform for this bundling service, or do you think it's going to be like the Disneys and the Comcast that will create these bundles?
I think it's the latter initially, and then Amazon and Google will look for what's the most valuable stuff that we can get involved in.
Like Prime, Prime could use live sports, just add that on, and it's like, okay, we have a library of stuff too, which is interesting to some people. So
I mean, you saw that I can't remember, was it was the NFL game, right? It was the first one out that was available on Peacock. There was a playoff game that was on Peacock only, and that ticked a lot of people off,
didn't
but
sell well with me.
But it also ratcheted up the subs a little bit. So I think more and more people will play with that lever and saying you have to sign up for this service to get exclusive content. I think that just continues, and that favors the technology guys who have deeper pocketbooks.
Well, I think wasn't one of the college football playoff games on ESPN Plus only?
Was it?
I think so, because then I ended up having to freaking subscribe to ESPN Plus for the day.
That or Tyler's wife wouldn't let him go to the bar. So
yeah, exactly. Right. Guess I'm subscribing.
Well, so since we're on this topic of sports, Celtics have officially won the NBA championship. Again, Keith and I are more the hockey fans, and so the Edmonton Oilers are forcing a Game 6 back in Edmonton. So that's going to be fun.
That'll
to
be
watch.
exciting.
But
is it?
Cool.
But my question to all of you is, what is your favorite sports memory?
Ooh. David, you want to start?
It's freshest, probably.
Exactly, right?
Yeah.
Last week.
He's got a smaller window to pick from.
Deschambeau winning the US Open. Yeah, exactly.
Good call.
No, I go back and forth on this. It's either Kyrie and LeBron coming back 3-1 in 2016 or Tiger winning the 2019 Masters.
Oh,
I think it's got to be one of those.
Yeah,
that's a good one.
It was so cool watching Tiger come back and beating out Finau and his whole group, and then Kyrie and LeBron with Golden State 72-10.
Yeah,
coming back 3-1. That was cool.
Nice. Those are good ones.
But
didn't see those coming, but I think those are good ones.
Yeah.
Well, since I'm a beaten down lifelong Minnesota fan, I'd have to go back a long time to say the 91 Twins. Just how the Game 6 and Game 7. Jeremy, huge baseball fan. I assume you appreciate those games with Kirby Puckett, catching a ball that could have been a home run, hitting game-winning home run in Game 6. Then Jack Morrison, Game 7.
How
10.
old were you when Miracle on Ice happened?
I was 10 only, but I do remember that.
Do you remember it?
Yeah, I do.
Yeah,
So that was huge. So I mean, I have watched that movie, probably 50 times with my son in different, versions of it. He played hockey, so it was like always this pump up movie to go. Tyler can relate to that.
Every away tournament, every road trip, you turn on
Miracle
on Ice.
Miracle is the go-to, huh?
Yeah. So at 10, I didn't quite appreciate
register?
as much. Yeah, you're right. It was a huge deal, but I didn't realize all the magnitude of it. Now, taking a step back, if I had to pick one event, but not at the time and place when I was 10 years old, that would be certainly a lot bigger than the Twins.
Yeah. Mine, because I was 14 when the Twins won that one. So Game 6 for me. Honestly, even more than Game 7.
Yep.
Game 7 was cool, but Game 6 with Kirby going up on the wall, scaling up the wall, and then hitting the homer to win the game, and the see you tomorrow night kind of thing. That's the one that still triggers. Again, I was a hugest baseball fan at that point. Basketball, I just don't have anything. Just because Timberwolves, I mean, this year was probably one of the best years. The 34-20 that KG put up in Game 7 but it wasn't even the finals appearance, but it was one of my favorite memories of it. But I got it. Yeah, I think I'm with you as 91. The miracle for what's it called would have been good.
Diggs.
Yeah,
Minneapolis Miracle.
Yeah. Minneapolis Miracle would have been good if we didn't get just
Steamroll.
Exactly.
That took a lot of the luster off.
And if it wasn't the luckiest play of all time,
Well,
just a guy absolutely missing. And then
I remember thinking, like, this is how the Vikings have to win something, right? It's just this complete, like how Boston came back from 3-0, right?
Yes. Yep.
It's like, this is how they have to win it. And then the next week, they just get mauled.
Yeah.
Well,
like, I guess not.
First drive gave us high hopes.
Oh, yeah.
It was all downhill.
Yeah.
Tyler, how about you? You got an event that,
Yeah. I think,
besides your Benilde championship run, or was
Yeah,
that maybe
that
that is it?
I mean, for a personal sporting event, yeah. I mean, winning state with the year that we had was a pretty fun and
It's not the worst thing in the world.
No.
Yeah.
Hockey in Minnesota is huge. So
Yeah.
for Tyler to be on a high
I mean,
school high school
winning in
championship
That is
front of
huge.
20,000 fans.
it's fantastic.
That is cool.
We had a guy on our team. He was paralyzed in the middle of the year, Jack Jablonski.
Jeez.
So it was a challenging year emotionally, and then kind of capping it off with a state tournament victory was pretty amazing. So,
Nice.
That's cool.
I don't know.
But I think
really
that
cool.
one. Yeah.
I think from a professional sporting event, I have two kind of like David. One was the Ray Allen Game 6,
Okay.
3 to send him to Game 7,
Yep.
or
Yep.
the 2001 Stanley Cup Finals, Colorado Avalanche versus New Jersey Devils.
Mm.
My dad and I got into it pretty good on. He was I think he was more so playing devil's advocate with New Jersey Devils because my favorite team growing up was Colorado Avalanche. But it was Ray Bourque winning his first Stanley Cup ever.
That's how many years he was?
I think he was in the league for 20
plus
some years.
Yeah,
But Joe Sakic, kind of the duel of the best goalies in the world at the time. Patrick Waugh. I don't know. That was probably my.
yeah. I think those are all winners. I
Yeah.
don't think we had a bad one in the bunch.
Yeah. David's Tiger one, because Tiger and I are the same age. So that golf thing, like,
Yeah.
I've never been much of
5
a
years
golfer.
ago,
Someone's
too.
aged a little more gracefully than others, I guess.
Yeah.
What are you
No, that was
saying?
cool.
What
That
are
was cool.
But
you
that,
pick who?
well, that's what I say is like the
Tiger
old
looks
man
old.
still has it was pretty awesome.
Yeah.
I mean,
Yeah.
Subsequently has had some difficulties, but yeah, at that time saying he still got it was a lot of fun because
Yeah.
I don't watch much golf. I was locked in on that one, so that was a good call.
Coming back from the personal stuff too. And
Yeah,
yeah.
exactly.
Just a cool story. all
Yeah,
around.
kind of making it all the way back.
Not as cool as Tyler's personal.
No, that's
high school.
That's a tough one to beat.
Didn't
Yeah.
realize we could throw,
Yeah. My
personal things. in
My
there.
once in a while softball championship doesn't really qualify to that one. Yeah, it doesn't really work that way.
Yeah, exactly.
All right. Well, thank you for listening in and like and subscribe. YouTube, Spotify, Apple, and if you want to throw in the Amazon podcast as well, that would be much appreciated. And we will see you next week.
Cool.
Thanks.